It takes planning to disinherit the Massachusetts Department of Revenue if you have life savings greater than $2 million. A large retirement account, a farm or small business, undeveloped land or woodland, residential or commercial income property, or vacation property make it likely that the value of your estate will total more than $2 million. Planning can save your family from having to pay tens of thousands of dollars when they inherit. If you're married, you and your spouse have a credit of $2 million each. 2 plus 2 is $4 million worth of assets that can be covered if you plan. But if the $4 million ends up being owned individually by the surviving spouse with no planning, the first $2 million credit goes unused after the first death. There is a 100% marital deduction that postpones any estate tax hit. The Massachusetts estate tax is postponed because 100% of the assets left to a surviving spouse are covered by the marital deduction, whether those assets are transferred outright to the surviving spouse or held in a trust that we plan in advance. With planning, $4 million of assets can be held in trust for the benefit of the surviving spouse and then distributed tax-free to other beneficiaries. One plan is to divide assets into two trusts, Trust A and Trust B. Property in Trust A, which we'll call the marital trust, passes to the surviving spouse and will be covered by the surviving spouse's credit upon their death. Meanwhile, another $2 million in Trust B, called the Bypass, Credit Shelter, or Family Trust, keeps assets out of the surviving spouse's estate and makes use of the first spouse's $2 million credit. Those assets pass tax-free to children or other beneficiaries upon death of the surviving spouse. Another plan would be to use a Q-tip trust that distributes income to the surviving spouse for their lifetime for financial security. Assets are not included in the surviving spouse's estate and flow to children or other beneficiaries without estate taxes when the second spouse passes. Advanced planning with these and other ideas can disinherit the DOR and pass your hard-earned life savings to beneficiaries.